Gold is going vertical right now, and not in a calm, rational, markets behaving normally kind of way. This move feels more like gold downed an energy drink, blasted a David Goggins podcast at 3 a.m., and decided sleep was optional. Historically, gold has been the definition of boring reliability. Over the last 4 decades, it's averaged roughly 6 to 12% annual returns. Nothing flashy, nothing dramatic, just slow, steady wealth preservation. But over the past 5 years, that script has been completely rewritten. Gold has been returning close to 20% annually, which raises an uncomfortable question. Why is a traditionally sleepy asset suddenly acting like a high-growth stock? At this point, there are really only two explanations. Either we are no longer living in a normal, well-functioning world, or humans have a far deeper emotional attachment to shiny rocks than any economist wants to admit. Either way, gold is likely printing another all-time high as this video is being recorded. And somehow, the strangest part is that no one can fully agree on the reason behind it. Traders disagree, economists argue, analysts hedge their answers. Even that Reddit guy who's convinced the future is gold bars and canned food doesn't have a clear explanation. Everyone has a theory, but nobody has a definitive answer. Before diving deeper, it's worth mentioning that this entire breakdown was built using Notion, not in the awkward sponsored interruption way, but literally inside the platform. Normally, researching macro trends means juggling reports, spreadsheets, and enough browser tabs to make a laptop sound like it's about to take off. With Notion Agent, that chaos disappears. Instead of manually pulling data, you can ask the agent for things like a long-term outlook on gold or a breakdown of central bank holdings, and it organizes everything for you. If you want to layer in more data, like gold as a percentage of reserves, it updates dynamically. Everything lives in one clean workspace, cutting hours of work down to minutes. Now, back to gold, because something significant is happening beneath the surface. An asset that's supposed to be boring is suddenly delivering superstar-level performance. So let's start by addressing the most common explanation people jump to: inflation. Yes, inflation has been brutal. Rent is higher, groceries cost more, and fast food prices have climbed so much it feels like Ronald McDonald hired a hedge fund manager. But inflation alone doesn't explain gold's behavior. If it did, gold would have exploded in 2021 when inflation was surging. Instead, it barely moved. Gold's real momentum only showed up much later, which tells us inflation is part of the story but not the main character. The more uncomfortable explanation is this: foreign countries are slowly losing confidence in the US dollar. Not loudly, not dramatically, quietly, like someone removing couple photos from Instagram weeks before announcing a breakup. The warning signs have been there, but most people chose to ignore them. For decades, the US dollar has been the world's reserve currency, meaning central banks held it in massive quantities to manage trade and reduce risk. But that dominance is gradually eroding. This doesn't mean central banks are dumping the dollar overnight. That would cause chaos. Instead, they're doing something far more subtle: diversifying away from it. 2 decades ago, over 70% of global foreign exchange reserves were held in dollars. Today, that number has fallen to around 58%. A 12% drop may sound small, but at a global scale, it represents trillions of dollars. And those funds aren't flowing into euros, yen, or pounds. They're flowing into gold. Gold has become the financial backup plan, the neutral asset with no political allegiance. Central banks have been buying it at record levels, purchasing over 1,000 tons per year for 3 consecutive years. That's more than double their historical average. In fact, 2024 marked the largest central bank gold purchase year ever recorded. Surveys now show that over 40% of central banks plan to continue increasing their gold reserves over the next decade, and nearly all expect holdings to rise in the near term. This isn't speculation, it's institutional anxiety. To be clear, the US dollar isn't collapsing tomorrow. It's still deeply embedded in the global system. The dollar is dead narrative usually comes from people stacking silver coins in a basement. But what is changing is the level of trust. We're moving from unquestioned confidence in the dollar to cautious dependence. And gold doesn't rally when confidence is high. It rallies when stability starts to feel uncertain. What makes this moment especially strange is that everything else looks fine on the surface. Stock markets are near all-time highs, risk assets are booming, AI companies are valued like they've already automated half the economy. Yet at the same time, gold is also breaking records. Historically, markets choose a direction. Optimism pushes stocks up, fear pushes gold down. Seeing both surge together is rare. Bonds, meanwhile, seem completely confused. Every asset class is telling a different story. That disconnect is the real signal. When markets send mixed messages like this, it usually means the future isn't as clear as prices suggest. Gold isn't rising because of hype or shine, it's rising because of who's buying it and why. The most powerful financial institutions in the world are quietly repositioning for a future they don't fully trust. And when that happens, it's worth paying attention.